for periods of our career. Candlestick Charting. The third edition of Candlestick Charting for Dummies is coming out in the next few weeks. I'm talking to you in the middle of May of 2026 right now. And the book is a kind of a combination of the two of us, although you are the lead on the third edition. I decided I'd had enough of candlesticks, and although I was in the background maybe pointing a few things out, you definitely took this one on, and now you are the queen of candlestick charting. And so with that, I'm going to let you take it from here. Needless to say, because I have a lot of interest in candlesticks, I'm probably going to talk over you a couple of times.
Well, you are the candlestick king.
Like that. Oh.
So candlesticks are a really unique way for traders to get a lot of information quickly about what's really happening at during the day or throughout the day. So it's going to let you know, again, the high price, the low price, as we can see, the close price and the open price. And what you can't see in this chart is that this section can actually be very large, which would signal quite a big gap or jump in prices. It can be very shallow. It can have so different shapes. And let me quick draw some of these shapes just to put things in perspective. You can have a candlestick that looks like this, which will be very different than a candlestick that looks like this. Or you can have candlesticks that almost look like this or down here. So they give you a perspective of different how the trading's going. Um, and again, this is where your high and your close is, but this is, or I mean, your high price and your low price, but this is also going to give you your opens. So where are we opening? How are things transitioning throughout the day? A black candlestick means had a downward movement, and a white candlestick means we have an upward movement. So we can easily see if we're bearish or bullish, or at least if the market during that specific time period is bullish or bearish. So we could be looking at daily, we could be looking at intraday. So that's another part of this that we really need to keep in mind when we're looking at the actual time frame of the candlestick itself and what type of information that's giving.
One thing I just kind of a little hint on how, and it's pretty easy when they're in color, and the days where the close is higher than the open is green, and the days where the open is higher than the close are red. You can just you can interpret that. Although in China they use red for up and green for down, but let's not convolute this one. When they look like this, though, I would always tell people that the one on the right, which is a bullish day, is hollow. It's lighter, so it's moving up. The other one is filled, it's heavier, and it's moving down. Just one way to keep that straight. And I don't remember if that's in the book or not. Probably is.
I don't know, but for those, I am today very
You're bullish.
bullish. Bullish. Okay. So we can also combine these with other different types of information. So this is looking at a bull, or not a bull. Now thinking about the Chicago Bulls, specifically Michael Jordan.
Stuck in your
I can't
brain.
help it. Michael. Um, so this is a candlestick uh, chart, and then below it is a volume chart. So we're able to quickly then see how the market is trending, what the volume is giving us. Are people trading this more? And for example, we can clearly see on September 4th, there's a jump in price. We see a jump in volume. So we know that more people entered the market, and they entered with more buying orders. So this was a purchase day. This was a good day to get in and ride the ride, so to speak. And this particular stock in this particular time period after the jump, we still saw quite a bit of upward movement. So we do see some of that floating, which is one of the reasons why candlestick charting is popular because it's similar to this idea that we're going to be reading tea leaves of what has happened in the past, and we're comparing it to what we think might happen based on charts that have existed and things along those lines. So this is a very technical analysis type of evaluation of looking at stock price data.
And I think I always feel like you want to give more credence to days with high volume, like where and not only was there high volume that day, but high volume that continued to push the price higher over the course of the trading session. And that just I think that's a pretty pretty bullish indicator. It's really easy to say that when stock's up 30 more points, after that pop. But also when you look at the far, and I have no idea what happens after this chart, but when you look at that far right, and you see that little star there on declining volume, that's actually a reverse indicator.
Ooh. And so again, what Dr. Rowe is really talking about is we don't know what's going to happen next, but just based on how the graph is structured, we can have an idea. We can predict what we think might happen to it, which is neat. And I think it's a good combination, particularly with fundamental analysis, laying this over to understand when you should get into the market and when you should perhaps leave the market. So remember, when you're trading, it's not only being right, but it's about being right at the right time, particularly with options. And so now we're looking at combining averages with our candlestick charts. And we can see this is a little more granular, so we can see the graph a little bit more, so we can have a better, clearer understanding of what these candlesticks look like compared to this last one where we don't have as clear. But this gives us an idea of the trend of the market. And again, this does a pretty nice job of highlighting where things are going and giving you an idea of how things should look going forward. I think this can be used quite a bit in conjunction with looking at volatility, because this is how we look at volatility movements. We're interested in the long term trend for volatility, as well as those, obviously those spikes, but we want to know what's been happening previously to give us a sense of what's going to happen in the future.
And this is a fairly short moving average. When you get out to about 10 or 20 periods, we tend to define uptrends and downtrends based on where the market is relative to the moving average. And, this is, we're not going to dive too much into the book, but this is in the book where, sometimes some signals, if we're in a downtrend, may mean something different than if we're in an uptrend. So I think if I were forced to only use one complement to candlesticks to trade, I would use different moving averages. I think it just gives us an idea of what the trend is, and it's pretty difficult to counter trend trade. So taking the signals that are like that first chart where we had the breakout and then it continued higher, you don't want to step in front of a move like that spike in early September of 2025, at least for a while, until you maybe see volume come down and it starts to top out like it looks like it's doing on that chart to me.
It's nice. This worked out very nicely that this was a good example. And I think you're really bringing credence to the expression, the trend is your friend,
Yes,
to
it
trade
is.
with the grain as opposed to against it.
What happens if you counter trend trade? It's like catching a falling knife, and then you lose a couple of fingers, and
No,
like
no, no,
that.
no, no.
So that's that. What counter trend trading is like that. It's very dangerous. So signals that go with the trend are kind of nice. Oh,
So this is
sorry.
our, sorry, no, this is our RSI graph. So this is relative strength index. And we're again overlaying it with our candlestick chart. So we have a better sense of what's truly happening in the market. And we can see a lot of different activity that has happened. This is actually a great graphic. I will compliment the person who put it on. This is nice to look at. So we've got again, these two different graphs so we can really start to see how the relative strength has changed. Notice that most of the relative strength is going to be right around that 50 mark. You're going to see some breakout, some decline, but really what you're going to see for the most part is this idea right through here where it's pretty static. It's going to be right in that area. And our last chart of the day is just another chart where
Yeah.
we can see the dark candles, and we can see some change with our hollow candle, and we can see the upwarding, or the, as you put it, the float of our hollow candle as the market potentially will rise. And with that, we welcome any questions, comments, or concerns regarding candlestick charting. And if you haven't subscribed, please subscribe. And the new edition of the Candlestick Charting for Dummies is out June 2nd.
Ooh.
And with that, we thank you so much.